of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show. I am Ruchika Chitravanshi. In today's episode, we will talk about the rising NPAs in the microfinance sector and what it means for their business. In Banker's View, we have for you today Rashmi Saluja, Executive Chairperson of Religare Enterprises Limited. We will explain and demystify the positive pay system in the Banking for You segment. We will pick up where we left our discussion with Tamal Bandhopadhyay, our consulting editor, on RBI and its supervisory role. And of course, we will tell you the poll results and share with you the question for this week's poll at the end of the show. We'll be right back. There has been a rise in bad loans in the microfinance business in the third quarter of FY23. Is the worst behind them? In our cover story, Raghu Mohan tells us more.
There has been a rise in bad loans in the microfinance business in the third quarter of FY23 to Rs 42,300 crore, up 16% from the previous quarter. This is mainly due to a change in bad loan classification norms. The Reserve Bank of India has said that non-performing assets can be upgraded to standard assets only after borrowers settle the arrears of interest and principal. Before this, non-banking financial companies or NBFCs classified such accounts as standard or even for part repayment.
It's true that the number of the absolute amount of NPA has gone up, especially those above 180 has gone up to 42,000 crore. What happened was that most of the MFIs, NBFC MFIs, they have a policy of writing off the loans after 180 days, which is overdue. But some institutions do not have that kind of a policy, and banks do not have a different policies. So because of that, the NBFC MFI, most of them have, especially the bigger ones, have cleaned up their balance sheet, and they have a much better NPA position, ranging from 2 to 3%. Whereas the overall position looks to be higher, mainly because of the bulk of the NPAs come from the banking side, where the writing off is totally a different policy.
According to Sadhan, a self-regulatory organization for microfinance institutions, the overall sectoral NPAs in the third quarter of FY23 were 13%. This is the same as the corresponding quarter of the previous financial year at around 13%. The portfolio at risk in the 30 days past due period, or PAR 30 plus DPD as it is called in trade, improved significantly to 3.43% in Q3 of the current financial year from 8.77% in the Q3 of the last financial year. Apart from banks, all other lenders had a lower than industry average under the parameter. NBFCs have a lower PAR 30 plus DPD of 1.22%, followed by not-for-profit microfinance players at 1.59%, NBFCs at 2.18%, and small finance banks at 3.22%. West Bengal, Puducherry, Uttarakhand, Punjab, Chhattisgarh, Madhya Pradesh, Rajasthan, and Delhi have a PAR 30 plus DPD level higher than the industry average of 3.43%. Also, all northeastern states except Manipur have a PAR 30 plus DPD levels higher than the industry average of 3.43%. Karnataka, Bihar, Tamil Nadu, Maharashtra, Odisha and Gujarat have a PAR 30 plus DPD below the industry average.
Raghu's report suggests that the worst may be over for microfinance institutions, but how much of the bad loan issue is purely accounting related perhaps needs to be studied. Religare Finvest, a subsidiary of Religare Enterprises, has completed one-time settlement with 16 lenders by making a full and final payment of 400 crore rupees. This paves the way for Religare Finvest to restart its business. Rashmi Saluja, Executive Chairperson of Religare Enterprises Limited, talks about Religare's plans to raise capital and the new business areas that the NBFC is planning to enter in a conversation with Business Standard's Manojit Saha.
Hello and welcome to the Business Standard Banking Show. Religare Enterprises has recently announced that its wholly owned subsidiary Religare Finvest has completed the one-time settlement with 16 lenders by making a full and final payment of 400 crore, which was well in advance of the deadline. Religare Enterprise also said that the settlement paves the way for restarting the business of Religare Finvest, a company that lends to the MSME sector. To talk more about Religare's future plans, we today have Rashmi Shaluja, Executive Chairperson, Religare Enterprises Limited. Ms. Saluja, welcome to the show.
Thank you, Manojit.
Now that you have paid all the dues to the lenders and you will probably get a new no due certificate soon, what is your immediate priority?
In fact, this one-time settlement has been a long journey that we have come through almost 4 years. And 4 years, in these 4 years, we tried the debt restructuring, and then finally the one-time settlement happened. But during these 4 years, when this thing was in progress, we had already paved and planned the way forward for Religare Enterprises and its subsidiaries. And we've been working on that for a while now. And if you want to know what is the plan for the entire group, so that is what I would like to mention here. Religare Enterprises is a CIC company, and it is investing in its subsidiaries and is also open for the investments where certain strategic investments can take place for the organization for its synergistic growth and strength way forward. So we have these 4 subsidiaries. One is Care Health Insurance, which was earlier Religare Health Insurance, and which is a standalone health insurance company, which is fastest growing in its own space. In fact, during the whole COVID also, it worked extremely well with the strength of 57% growth trajectory. Then we have Religare Finvest, for which you're just talking about the one-time settlement. It has had its glorious days, and then of course it went through difficult patch because of siphoning off and the mismanagement of erstwhile promoters and management, which is now a new company and which is now going to grow its strength in the MSME space and also certain niche areas that company has worked for a couple of years to understand the market, understand the global economy, understand the domestic economy, and how the mindset of the present banking sectors work. So based on a very robust and very researched platform, we have decided that we would be going in a very granular book creation, and then we would definitely be working on doing a niche space in the healthcare sector. We would like to participate in the agri sector because healthcare and agriculture, these are 2 sectors which the progress of the country also depends on. And this is a very revolutionary platform to work upon. Then, of course, we have a broking and securities, which is, in fact, the oldest flagship company of our organization. It is 25-year-old, and we want to build up a very robust platform for that. It is doing extremely well. And then there is a housing company, which is RHDFCL, which works on a space of affordable housing sector, which is again the requirement of the country. And Prime Minister has been talking a lot about Pradhan Mantri Awas Yojana. And we also feel this is a sector and a group which we want to be creating a very strong platform. And this is right now a subsidiary of RFL, which we want to bring at REL level. So these are the existing strengths that we have to actually cover up.
Now, coming to some specific issues, now when do you expect the RBI's prompt corrective action framework to be removed?
So, RBI as a regulator is very defined in its regulatory processes. There is nothing left for interpretation. So that is a very good idea. So any company like ours, which has to come out of CAP, which is Corrective Action Plan, it has to go through its processes. And those processes, if you're able to, meet up with, then the Corrective Action Plan process starts. And exactly that's what I want to say. After yesterday, that day before yesterday, then we completed our one-time settlement, and then based on it, the entire parameters of RFL, whether it is CRAR and other parameters that meet up the cap, we do fit into that category. And subsequent to that, it's not a very tedious process. And I'm very hope that moment we get the no due certificate from the lenders, we will be going ahead and applying for cap, and it should look like that it is 1.5 month process. And because the entire development of the company and health of the company, RBI is well aware of, so there is nothing which the regulator does not know about us. We have to just be informative more about once the no dues comes.
Now, coming particularly to the Finvest, what are your growth plans for the Religare Finvest? Say for over the next 3 years, 3 years, where do you see the loan book is growing?
So, actually, the stabilizing the company is most important. Once it is a stable company and once it is fully compliant company, and the governance is something which the company would project and would work on as its major pivot, then of course the lenders and other people who want to in fact invest in the company and the banks, they become more confident and more they trust the platform much better. So our first endeavor is for 1 year, we would, in fact, in the last couple of years, what we've done is while the process of OTS was still going through, we ensured that we understand the market, we understand the business, create a business plan. That is what we have done. And we have also hired some very good resource to run these businesses as well. So while the collection would continue, there'll be business which will move forward. We have identified the states, which would be the states where we would like to have a presence forward, and what are the areas. So areas that we, as I was just mentioning, we are going to create a very granular book. We are going to be focusing ourselves into MSME space. And that also we have to create the niche area that we are very, very hopeful that will work well. We are hopeful that the healthcare sector that we have researched, we have a care health insurance company, so we understand the DNA of how the healthcare sector moves. So that is one area that we are very bullish about. And we are also very hopeful on the agri space. And the teams have really done research. So we would be, in first year, we are going to be utilizing our own fund, which comes through the recovery and the collection, so that when we create a robust platform, we have got out of it, now are getting out of cap, and then successfully running or starting a business. Once we are able to showcase our strength, then of course, from next year onwards, we will be reaching out to the markets and to the banks, because we will be constantly needing the bank support, because raw material is money. So we are not in a hurry. I always say that we're not orthodox, but we're very conservative. So we are going to be very, very strongly talking about how strong our risk mitigation factors are going to be. And based on it, this year is stabilizing, next year is the growth.
On that note, thank you so much for speaking to Business Standard. It was a pleasure talking to you.
Thank you so much for talking to us. Thank you, Manojit.
Thank you.
Religare has ambitious plans, but it is not in a hurry. As Ms. Saluja says, they are not orthodox but conservative. Her first priority will be stabilizing the ship before shifting gears for growth. Moving on, in our Banking for You segment today, we will tell you about the positive pay system, which more banks could make mandatory. It requires you to reconfirm some of your banking information when writing a check. How does this system work, and does it make your check payments safer? Bhaskar Datta explains.
In a fresh move to protect individuals from fraudulent payments, public sector lender Punjab National Bank, or PNB, had earlier this month said that it has made the Positive Pay System, or PPS, compulsory for check payments worth 5 lakh rupees and above. Over the last couple of years, banks have been making efforts to implement the PPS, which essentially provides an additional layer of security against risks during processing of checks. PNB's decision comes into effect from April 5th. Prior to this, the compulsory submission of check details under the PPS was set at a higher ceiling of 10 lakh rupees. Effective January 1st, 2021, State Bank of India, or SBI, the country's largest bank, implemented the PPS for all modes of check payments, including cash, transfer, and clearing. SBI too is planning to make the PPS mandatory for savings bank account checks worth 5 lakh rupees and above. The amount would be 10 lakh rupees and above for all other account types such as current account, cash credit, and overdraft checks. Another state-owned lender, Bank of Baroda, has also issued notifications to help the customers complete formalities regarding the PPS facility. So what exactly is the PPS facility and how does it work? According to the Reserve Bank of India or RBI, the PPS is an additional indicator provided by the National Payments Corporation of India or NPCI to all banks to help in the check clearing process and to preempt check-related frauds. Specifically, the PPS has been introduced to bring down instances of frauds which occur because of check leaves being tempered, the RBI said. The PPS requires customers to reconfirm essential details such as the account number, check alpha code, issue date, amount, and beneficiary name when issuing checks of a certain amount, PNB had said last week while announcing its move. The RBI has advised banks to enable the PPS facility for all account holders who issue checks for amounts of 50,000 rupees and above. While the use of the facility is at the discretion of the account holder, banks may consider making it mandatory for checks worth 5 lakh rupees and above, the RBI said.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Positive pay system could bring down instances of fraud, and as Bhaskar explained, it would provide an additional layer of safety. Next, we have with us our consulting editor Tamal Bandhopadhyay to talk about the new ways in which RBI is now keeping a tab on banks and also borrowers. He also spoke about the Silicon Valley Bank collapse.
Hi, Tamal. So let us pick up our discussion from last week, where we were talking about the supervisory role of RBI and how it has become very proactive in its approach. Why has RBI become so aggressive?
Yeah, that's right. Aggressive is probably the right adjective. I think, if you see in the recent past our experience, like take the case of Yes Bank, and the perception is this: we have a regulator who is too slow to react. And as far as Reserve Bank of India is concerned, its defense, it all depends on, it has to be very careful about the financial sector stability, so it can't do things in a hurry. So I think Reserve Bank of India now does not want any kind of negative surprise anymore, which is why, to use a cliche, nipping in the bud, that's its approach. Theoretically, Reserve Bank of India or the banking regulator is the last line of defense, but it can't become the first line of defense. But there's nothing prevents it from proactive, and that's what Reserve Bank of India is doing when it comes to supervision. It has become very, very proactive.
Any examples that you can share?
Well, there is many. I've written in my column, certain things are unheard of. Like, for instance, if Reserve Bank of India feels that here is a bank whose management is not telling the truth to his board of directors, not keeping the board informed of certain activities, what will happen is this particular entity, will get a call. Probably the company secretary will get a call from one of the RBI senior executives, the executive director, to check when is the board meeting. And this gentleman would invite himself at the board meeting. And while the meeting is on, he would walk in and make a presentation to the board of directors, and then leave quietly. Or, for instance, till now, Reserve Bank of India's market intelligence had been about cutting newspaper clips and keeping a watch on that, or probably reading the investors' presentations and all. But now it is checking the social media, the Facebook, WhatsApp, whatever is happening, the regional channels of TV, radio, and it's creating a sentiment index. So the bank, which apparently cannot be seen, but you can catch certain things through this way. Yet another example could be, RBI is not only keeping a tab on the banks, but also its borrowers. So whether the borrowers are capable of paying back the money. Yes, Reserve Bank of India get the data on the Religare platform. We discussed it. But on top of that, RBI keeps a very close tab on the borrowers.
And how is RBI using data, technology, analytics to do all this?
Yes, it is. It is. As I said, it's the ideal situation. It wants to do a good combination of off-site and on-site supervision. And the off-site supervision, as you know, it's completely data-driven. It's using that, and also the RBI's College of Supervision is coming in handy for that. It's training its people to read the data.
Are you happy with the way RBI is managing things now?
Well, there are multiple responsibility for the Reserve Bank of India, like inflation management to financial stability and managing the banks. So a few things probably going beyond inspection and supervision. One thing is this about giving license to the right kind of entity. Since early 1994 until now, we have seen the entry of giving license. RBI has given license to clutch up universal banks in 3 installments, and small finance bank as well as payment banks. Now, if you look at the promoters of them, probably not everybody deserve that license. So that fit and proper criteria, I think RBI need to be very careful about this.
One of the things we have to talk about is the collapse of the Silicon Valley Bank, and the markets have reacted here as well. Are there any lessons for us from what has happened with the bank, and also how do you think our banking sector reacting to this development?
This is the second largest bank failure in US till 2008 after the Washington Mutual. Yes, there are lessons to be learned, but should we be worried? And like Indian banking system, the way I think the analysts are reacting and the markets are reacting, it's probably a little exaggerated. Because our banking model is very different from this one. Now, this is a bank which was particularly catering to this 40-year-old bank was catering to the fintech startups. So it was trading where the mainline banks were actually fearing to trade. It was going there. And it has become a victim of very poor risk management. What's happening is this: it had plenty of liquidity, the deposits, and these deposits was used to buy long-term government bonds. But with the rise in policy rates, the yield started hardening, which means the value started eroding. And at the same time, what happened for his customers, the startup fintechs, when they found a bit of a tight situation in terms of raising money, the fund was not flowing when they wanted to take their money back in the form of deposits. This bank had to sell certain assets and had to book losses because of the erosion in value. As you know, that when the yield rise, the value actually drops. And that's the case. And there's a ripple effect of that.
Great. This is something that we will be keeping a close eye on, and great insights on RBI as well. Thank you so much, Tamal, for joining us today.
Tamal says that our banking system is very different, and it is poor risk management that has caused the Silicon Valley Bank crisis in the US. It is also interesting how the RBI uses social media and market intelligence and tries to avoid any negative surprises, as Tamal puts it. Last week, we asked you, are you happy with your consumer credit scoring system? 51% of our respondents said yes, and 49% said no, they weren't happy. A pretty close contest, that one. With speculations on interest rate hikes and some saying that the rates will rise in future, is it better to go for a fixed rather than floating rate on your home loan? This week's poll question is, does it make sense to have a fixed rate on home loans? Our polls open on Friday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.